The naysayers will tell you, well, where's the growth going to come from to fuel commodity price increases? And this is where I think what gold is telling us recently becomes actually very important. We've seen gold now, I think it's at 2370 today, give or take, just slightly below $2,400. And let's just take that statement in isolation for a second. As someone who's been focused on gold for almost 25 years now, let's think about me casually talking about gold hovering just below $2,400. That is a massive change. $2,500 was always seen as for a lot of people, oh, do you think is gold one day going to break $2,500? And we've now seen $2,000 become a very distant floor in the gold price.
In the current economic climate, inflation is high and debt levels are soaring. This situation is pushing more investors to look towards commodities like gold, silver, and platinum as safer places to put their money. Commodities are basic goods used in commerce that are interchangeable with other goods of the same type, and they can be important hedges against economic uncertainty. In today's episode, Grant Williams, a seasoned financial expert, explains the difference between investors and speculators. Investors are typically looking for steady, long-term gains and prefer less risky assets. In contrast, speculators are drawn to the potential of quick profits and often engage in more volatile markets, such as cryptocurrencies and stocks that can suddenly rise or fall in value. Williams emphasizes that knowing whether you are an investor or a speculator can greatly influence your approach to the markets. Moreover, Williams points out the opportunities in emerging markets, particularly those rich in commodities and with positive population growth trends. These markets could offer valuable investment opportunities if approached carefully. Instead of just buying into broad market funds, he advises investors to understand the specific conditions and potential of these markets to make more informed decisions. Now, we'll show you the best clips of the latest interview, and later on we'll do a quick market recap. But first, smash the subscribe button so you do not miss out our daily recaps. Enjoy the episode.
Everything's kind of changed very quietly, and everyone is focusing on the gold price, right? And I've spoken about this for many, many years. I've given presentations on this, and my contention is, and I'm sure there are people out there that disagree with me, which is absolutely fine, but I think there are two prices. One is the gold price, and the other is the price of gold. And there's a very distinct distinction between the two of them. The gold price is what I just said, it's $2,370, and it's on a screen, and it's a number that's quoted on futures exchanges, on the COMEX around the world. There's a spot price of it, and that's the gold price. The price of gold is very different. The price of gold is what you have to pay to secure an ounce of gold in your hand. And they're not always the same. There is nearly always a significant premium on gold coins. If you want to buy a gold coin, you're not paying spot for it. And those premiums fluctuate. And so when people focus on the gold price and they talk about, well, we're going to break out of 2,500, or we're not going to break through 2,500, that's going to be a ceiling, that's a resistance. It's kind of pertinent if you're a speculator. But if you're an investor, it really isn't. If you're investing in gold, and gold is different in so many ways to just about every asset that you could think about taking a position in or looking at. And when I say gold, I include silver, and I include platinum in that. I'm just talking about precious metals, but I like to just keep it simple and talk about gold because they all have similar characteristics. Once you look at gold as an investment, what are you really investing in? Because if it's about the price, you're not investing in gold. You're just speculating on an asset that you think is going to go higher in price, and that's totally fine. You can have a long-term view, you can have a short-term view. It's totally fine. But to me, investing in gold means I want to hold my surplus capital in an asset that's going to protect my purchasing power, that is going to allow me to be confident that over the long term, I'm not going to be debased in my purchasing power, as I will absolutely be guaranteed to do with fiat currency. And what we've seen happen in the last couple of years, since a few days after Russia crossed the Ukrainian border, I think is incredibly significant. And more people are starting to understand what's happened. And more people are starting to realize the importance of it and the connection between what's happened and the price action in gold. And that was not necessarily the Russian invasion of Ukraine, but it was the US Treasury's actions in freezing the assets of the Russian central bank. And I spoke about this at the time, and I wrote about this at the time. That to me was arguably the most significant piece of news in the gold market since August 15th, 1971, when Nixon closed the gold window and took the world off a gold standard. And the reason is very simple. It's not obvious, but it's simple. And that is, as soon as the Treasury did that, as soon as the Treasury froze those Russian central bank assets, they sent a message to every central bank in the world, friend or foe, that this could happen to you. You could have your sovereign national reserve assets frozen at the whim of another government. And the reason that's important that it was the US Treasury is that thanks to the dollar being the global reserve currency, and thanks to the dollar being the world's energy currency, every single central bank in the world holds US dollars because they have to pay for their energy imports, or they receive dollars from their energy exports. So you've had the US Treasury say, right, if you own dollars, which is everyone, tick, that's us, there's every central bank in the world, there are a set of circumstances under which we will freeze those and you will no longer have access to them. And you could be the most staunch US ally in the world, but you don't have a choice at this moment in time. This is a national security concern now. You cannot have access to your reserve assets frozen. So you have to come up with a plan B. You have to have a plan to mitigate that possibility. And you don't have to do it. No one's going to dump all their dollars and buy another reserve asset that day, but you have to diversify. You don't have a choice.
In today's news recap, the booming silver demand may lead to extreme price action, TD strategist says. Silver is the latest mined material to experience an uptick in global demand thanks to its uses in electronics and clean energy technologies. And a commodities expert predicts the price of the metal will continue to climb. I think that silver is probably the most exciting trade in the energy transition theme within the commodities complex today. Daniel Gali, a senior commodity strategist with TD Securities, told Bloomberg in a Tuesday interview, "What we're talking about here is a market that has been in a universally recognized structural deficit, essentially driven by the boom in solar capacity across the world and the growing trend of electronics being embedded in everything that we do, but particularly so in vehicles." The price of silver was hovering just shy of $32 an ounce in Tuesday afternoon trading, the highest price on record aside from brief spikes in the early 2010s and late 1970s. Gali said the recent bullish run is due to a historical lack of investment in silver-specific mines, which has led to supply worries in the industry as demand continues to boom. Silver is primarily mined as a byproduct of lead and zinc mines, of copper mines, and of gold mines, so there are very few companies that mined silver specifically, he said. Gali added that until recently, supply deficit concerns had been tampered by a massive amount of above-ground inventories that could be relied upon to balance gaps in silver markets, but he expects that to change. Now, we'll show you more clips. But first, subscribe and turn on notifications and check our pinned comment for some massive sign-up bonus.
What you're focusing on is very different if you're an investor or if you're a speculator, and that's always I kind of bore myself talking about this, but that's the place you have to start. You know, which of those are you? Because if you're one, you have a very, very different mindset to the other, and you're looking for a set of very, very different things. And everybody thinks of themselves as an investor, but the reality is there are fewer and fewer investors around because investors, by definition, are looking for long-term returns. They're not looking for volatility. They're looking for steady gains and growth and all the boring things that used to be what this game was all about. And we've kind of found ourselves in a world where excitement and quick gains and volatility are what we've become used to, and so more people have gravitated that way. So I think if you're a speculator, then you're just looking for ways to make money in the short term, and there are plenty of places you can do that. Look at the meme stock rebirth we had a few weeks ago with GME and AMC and the like. And so there are plenty of things that you can get involved in, whether it's crypto, whether it's meme stocks, whether it's volatility itself, whether it's jumping on the momentum in the Japanese yen. There are all kinds of things that you can look at. And really, for a speculator, the broader picture is not really so important. You don't need to zoom out too far. You're just looking at momentum. You're just looking at price action, and you're trying to, for the most part, grab a trend that you see in motion, exploit it as best you can, and get off before it ends. And the time frame for that is getting shorter and shorter. Like I said, going back to the GameStop AMC revival a couple of weeks ago, it was 3 or 4 days. And so that's kind of one way to go. And if you're in that camp, like I said, the beauty of it is that you don't need to really understand the world quite as much. The ugliness of it is that you are much more exposed to short-term volatility, and it's a much more psychological test for people. I think is trying to stay on that horse in the short term and have the humility to think you're wrong in a very short space of time, and that's difficult for people because being proven wrong like that, most people don't have the courage or the discipline to say, no, I'm wrong, I'm out. And so the quicker you're proven wrong, the more dangerous it is because you tend to think, I can't be wrong, and I'm going to let that ride a bit longer, and that's where the damage starts. Switching to the investment side of it, which is much more what I focus on, you have a very different setup, and that is you do need to understand the world a bit better. You do need to understand the kind of long-term forces that are pulling at markets and making them do things. You have to have the ability to focus on those and drown out the short-term noise, and you have to be able to do the opposite and stick with something that is going against you and not get out. And again, that's a recipe for potential disaster because a lot of people, again, will in our monkey brains, we will say, I'm right in the long term, I'm just wrong in the short term. And of course, the picture changes every single day. So the greatest long-term investment thesis in the world can be invalidated overnight with a press release or a government policy being instituted. And so again, you have to be ready to be wrong. And the common thread that investing and speculating have is you're going to be wrong in both.
What do you think of today's episode? Do you agree with Williams? Is the bull market in precious metals likely to continue, or will the banks push the prices back down again? Post in the comment section your honest opinion and share your price prediction for silver at the end of 2024. Thanks for watching, and now check this video right here because it's a perfect fit for you. I see you on the other side.